I welcome all of you into the channel Algo-Driven Lab. And in this channel, I'm going to backtest different trading strategies using like backtesting tool, which is like written code on using Python. And in every video, I'm going to backtest different trading strategies and the different financial assets such as stocks, forex, crypto, ETFs or indices, and commodities or commodity, let's say. So I already selected key 5 financial assets which will be similar to for each, let's say, video, and then we can compare how the even different strategies behave for different types of financial assets. And this is a kind of initiation in the first video on this channel. I welcome all of you and hope that this video will be helpful for your trading and to some extent investing approaches if applicable. So today we're going to start as the first and the starting point. Today's backtesting, like let's say, approach will be quite simple, and we're going to start from stock, and then we'll progress slowly to other assets, right? But it will be later. So first of all, thanks for watching this. I really appreciate if you can just subscribe to this channel to stay tuned and keep tuned to the next backtesting videos, which will happen at least once a week and on weekends proposed. It will be great. And of course, if you can just like this video, please do so at the end. If you dislike, please do so as well. And of course, leave your comments. That's very important to me. Okay, so this video will be not so long. I'd like to make it short and concise. Today, this is the first backtesting sets of video. And today we're going to consider a simple moving average crossover strategy. And on historical data, we're going to consider whether this strategy works or not by looking at very important, let's say, characteristics of backtesting, like which I'll show later on. And to do so, I'm using Google Colab platform, and here all the codes are written for backtesting, and we'll go one by one. All of the code already run and by me, and there is no need of waiting to load or to execute every block of code. So we'll just go one by one of the block of code, and then we'll see what is really like went on right or wrong, right? So first of all, let's say we are going to install necessary libraries. So to do so, we are first install Yahoo Finance library, technical analysis library, pandas, numpy, and matplotlib to visualize our like equity curve and other things. Second, we are going to import, let's say, this specific libraries to our environment, so that we'll work with them for our analysis, right? Then very important thing is download the data, and to do so we are download Apple stock. So today we're considering Apple stock as a starting point, and we downloaded from Yahoo Finance platform. And the starting date, like I picked up the most like possible 10 years historical data. So from most available 2016 data of 24th of April to 24th of April by 2026. So exactly 10 years of data. And we are also using this drop now let's say function to consider only those data which is available, right? Okay, then we are going to import technical analysis like library. And here we simply what we are doing, we are importing two simple moving averages, which are one of them, like let's say call it fast, which is 10, and the 10 days, and the 50 days, which is like a long one or like slow one. And the next, what we're going to consider is the strategy itself, what we're going to backtest. So here we're using, as I mentioned, just as the starting point at the beginning, that we are considering the trend strategy, simple moving average crossover strategy. And here the strategy is very like straightforward. When simple moving average of 10 crosses up, or the simple moving average of 50, we're going to buy, meaning that we have positive one. And when simple moving average of 10 crosses down, simple moving average of 50, meaning that fast crosses down, slow one, we are going to sell, which is, you see, is -1. So here we have two signals, right? And we are doing this for 10 years as a reminder. And for this, we also ask this block of code to return us key metrics such as returns, strategy returns. And here, of course, we are using the closing prices, not open, not high, not low. And we are filling the data, not available data, by 0 to make it like not a number or not available data. And also we were going to consider equity curve. So we would like to see cumulative equity curve, meaning that it will progress from year to year, right? So it will be not just 1 year of window frame. Okay, so here on this block of code, I'll not go like on the technical details of the function which we define here, but basically I'll just stop on key metrics, which I think very important for every backtesting video, or it's a backtesting analysis. And the first one is drawdown. Basically, it is maximum drawdown, but let's call it drawdown. It's the largest peak to trough portfolio loss during the period. So basically, you can see that at one point of time, we can really like lose the maximum possible amount of fund of our initial capital or equity. So, for example, if we like see the drawdown is 0.5, it means that 50% of our like total or initial equity or capital can be lost at one point of time, which is like very important characteristic. Second one is Sharpe ratio. It measures risk-adjusted return by comparing excess return to total volatility. It shows to what extent the risk-reward strategy is behaving. And here, this like a formula we are using. Okay, so I'm not going to stop on technicalities, but I'm just explaining the terminology itself and the metrics. Next is compounded annual growth rate, or CAGR. It's showing actually average yearly return over time. Very important metric, meaning that over a year we should either like gain or lose based on using this strategy. And of course, the win rate. First one is percentage of trades that are profitable. So meaning that we just wanted to calculate to what extent our strategy is winning or losing, right? And the profit factor, last but not least, is a ratio of total profits to total losses, indicating strategy efficiency. It measures strategy efficiency, meaning like we are going to consider what our total profits divided by total losses. If it's the higher, the better, of course, meaning that our strategy is efficient, right? So here we return our metrics, and then we would like to ask a code to provide us outputs. So basically what we have, just let's go over here to make it things nicely. You see that here is a loop for, and we're asking to make it clear what we have and what we produce. So basically this is the most important part. And as you can see, basically the Sharpe ratio is just like let's say 29.16. So it's just 29, let's say percent, or not even percent. It should be like around or more than 1 to make it this like let's say strategy viable. But we see that it is a bit, not a bit, it's far away from 1, and it is not really worth considering as a risk reward strategy. Maximum drawdown actually is huge. It's 51, almost 52%. We are losing of our initial any capital. So for example, if we're like using 1 million of equity, meaning that like 500, over than 500 USD can be lost at one point of time. Compounded annual growth rate is just 4%, not really much. Win rate is just almost 0.5. Not bad, but not the best, of course. And profit factor is 1.0556. This is not bad actually, but it can be also improved further on. So basically, this is a key 5 characteristics, and the strategy itself good, but it's not so good enough, let's say, because we are just having less than half of our win rate. Compounded annual growth rate is quite low, let's say. It's lower than even 10%. If we compare it to like a buy and hold strategy of S&P 500 index, so this is not really lagging behind. And last but not least, let's just see how our equity curve behave over this 10-year period. And here's all the matplotlib like function and code over here, sorry. And here how the equity curve looks like. You see here is a percentage of the growth, and here's all years starting from 2016 over 2026 for 10 years. So you can see most likely maximum drawdown happened all the way here, just in the mid of 2018, and the maximum upside we have is just during the COVID-19 pandemic. So we have like this sharp increase, right? And then we have a kind of flat starting from 2022, yeah. And basically this shows us where we have the maximum drawdown, where we're gaining a lot, and how all the strategy behave over time. Okay, so this is it for today, and hope you enjoyed and find this video useful for your analysis, for your just knowledge, let's say. And of course, this strategy can be improved or can be like modified further on using different, let's say, another asset or like maybe another trading strategy, just maybe not simple but exponential moving average. Why not? So please leave your comments what you think to do next. So as you can see, I'm not optimizing the strategy. I'm not using any sophisticated things. I'm just really simply backtesting like single stock, just for your information and of course for your reference. So this is of course not like let's say financial advice or investment recommendation, and just for education purposes, please keep in mind. And please again don't forget to subscribe just to stay tuned, of course. Yes, just also click on notification bell to stay tuned to the next sets of backtesting videos. And please also put thumbs up if you like this video. If not, put thumbs down, it's totally fine. And leave your comments, what do you think, what you want to see next, yeah, so that I'll know your preferences, and we will and I'll proceed with next backtesting video. Meanwhile, we should have happy and profitable trades and good investment decision using algo-driven lab backtesting results. See you soon.